Right now, the yen is actually very weak since 2016. Surprisingly, Japan has been the only economy that has had negative interest rates since COVID started, and they actually started decreasing interest rates to have a loose monetary policy and to improve overall economy. They actually also, it's one of the countries with the lowest inflations. They has had in the past 5 years an inflation below 1%, excluding 2021 and 2022. This COVID related stuff. Right now, the inflation is at 2.8%. But if we compare the direct effect of interest rates to their currency, we see here that actually Japan has had very low interest rates, actually on the negative side since 2016, while the US, Eurozone, England, Australia, the average interest rate in all these areas is actually 4%. So many people have been pounding the yen and benefiting from the loose monetary policy in Japan by getting, not to say free money, but very cheap money in Japan. And that's what Japan is actually aiming for, the Bank of Japan. But the yen has actually had a hard hit right now. But what does this mean? A weak yen equals strong stocks. Right now, with a very loose monetary policy, below 1%, well, in the negative side on the federal funds rate in Japan, actually, Japan stocks have outperformed the Asian stocks. So the Nikkei has had a return of almost 30% this year, surpassing Tokyo and also the Asia Pacific Index. And I even recall Goldman Sachs being bullish on it in 2022 because of the fact that Japan has been very vocal, just as the Fed, of lowering inflation to 2%. Well, Japan has been very vocal at maintaining these interest rates very low. So these Japanese stocks have actually been very well to the upside, and they actually just touched a 33-year high, and their stocks have risen more than 20% this year.
Wow.
And I remember, Julia, I mentioned on Thursday the commitment of trade report, the COT. This report that comes out every Friday. You can get insights on what are institutional investors and also speculators, traders doing. And here we see that speculators are actually the most short in the yen in the past 2 years. This is the latest commitment of futures trading report of the CFTC that came out on Friday. But you compare the speculators against to the asset managers, because it puts in 3 categories the commitment of trade report. And we see that it was the past week, that asset managers are turning bullish since June of this year on the yen. And why do I like to see this comparison? Because you can see, in other words, what fishes are called, the retail investors, such as me, the smaller ones, what we tend to do against the big institutional investors. And right now, speculators are bearish, but for the first week, asset managers, institutional money is actually bullish. So that's like a green flag for me on the yen. Also, inflation is above its target. They have the same target as the United States at 2%, but inflation is right now rising a little bit. The latest report came in last week on the CPI in Japan, decreased from 3% to 2.8%. And right now, this is the most important report to watch in Japan, the CPI, the report we used to watch a lot last year and also this year in the United States. That's what the Fed, the central bank of Japan is actually watching. And they got a little bit of a breather watching that inflation decrease from 3% to 2.8%. But still, there's a lot of pressure right now from investors and also companies that it's time to increase the interest rate due to the weak yen that is not benefiting anybody in Japan right now. And I actually saw a report from Bloomberg that actually they peak just came out two weeks ago. They named the Japanese yen the top currency pick for 2024. The medium forecast compiled by Bloomberg, they expect the Japanese yen to strengthen to $135 per yen at the end of 2024. So here you can see in the graph on the left side, actual asset managers, the one I showed earlier. This is a comparison of this year. They're actually starting to become less bearish as the weeks go by. Last week coming in as the first one to actually become bullish. This is from 2 weeks ago. The past one I showed, where they show they're actually bullish. This one is from the last week, so it's the most recent one. But that's a trend line we can see. They're actually becoming less bearish on it, and the yen has also started to strengthen against the US dollar, because as Brandon said on the past stream, all currencies are trading pairs. So when the Federal Reserve started to sound more dovish, a little bit less hawkish on their statements, the yen actually started to strengthen a little bit, since the United States is expected to decrease, based on the market sentiment, to decrease 7 times the federal funds rate next year, which is surprising since the Fed only is expecting to do it 3 times. And this is what investors are seeing about the yen. The FX Japan, one of the main media outlets on Japan, the price range for the yen is actually 130 to 135 area. They are citing that the Fed and the European Central Bank will start decreasing and lowering the rate cuts, and that will actually help the yen. Also, State Street, one of the biggest fund managers in the world, or money managers in the world, besides from BlackRock and Vanguard, they didn't put actually a price range for the yen, but they were stating that because of the dollar was being supported by high yields, strong equities, and a strong economy. Right now, they say that if those factors change, that will drag the lower down, and the yen may feel the impact the most from a weakening dollar. That means a move to the upside.
Interesting.
Also, Daiwa Securities, another financial institution very big in Japan, they also have a price range similar to FX at a 130 for the yen. They will expect that the US economy may start going to some trouble, the dollar weakening, and that will help the yen. Also, Sumitomo Mitsui Asset Management, another one of the big financial institutions in Japan, didn't put a price range, but they're expecting downward pressure on the dollar due to the decrease on federal funds rate. So everything that I'm basing right now here is on the macroeconomic events, on things that we already know, things that the Fed has already said. They expect to decrease the federal funds rate 3 times next year. The market is expecting 7, so that would be a surprise. Let's see who do we follow. Also, the euro has been very strong against the Japanese yen, and the European Central Bank has said that their interest rates are actually very high. Germany right now is in a recession, so they said that they did some mistakes at increasing too high the interest rates due to the fact that they were in a war. So we can expect also several rate decreases next year on Europe plus the USA. That will alleviate some of the pressure on the yen. And this is why I actually took my position. Still, since the next Fed decision will be on January, and the next Bank of Japan decision on the rates will be on February, I took it until March. I'm expecting these major macroeconomic events take a certain impact on the yen to the upside, and I really like to see that asset managers are actually starting to become a little bit bullish on the yen for the first time since June. Also been set as a top performing currency for 2024 next year, the yen. And also we can see a move to the upside on the yen due to the fact that the Japanese stocks rallied so much that a reversal on the stocks, a pullback, the normal one, may lead also to a stronger yen.
Interesting. Yeah, no, I find this interesting